Do you feel like intraday trading is draining you with stress and constant losses? What if I told you there's a better way, a method that doesn't require you to stare at your screen all day but still help you build wealth in the stock market? Yes, in this video, I will show you everything you need to know about swing trading, the ultimate strategy for smart and consistent profits. Most traders in India they directly jump straight into the intraday trading because it seems like a quick way to make money. But here's the harsh truth. More than 90% of the retail traders lose money in the process. They miss out on the most important the swing trading, a strategy that balances trading and investing perfectly, giving you the best of the both the worlds. By the end of this video, you will understand how swing trading works, how to select the right stocks, which tools to use, how to manage your risk effectively, and if you have been struggling with the stress of the daily trading or looking to grow your portfolio, then this video is for you. But before we dive in, make sure to check our previous episode in the series of trading strategies. And don't forget to hit the subscribe button below and click the bell icon so that you never miss on any important update and knowledgeable video. Like this video if you are excited to master swing trading today. So, what is swing trading? Swing trading is all about capturing short to medium term price movements over a few days to few weeks. Think of it as like taking small calculated steps instead of running a marathon or sprinting blindly like in the intraday. For example, consider stocks like Tata Motors or Adani Ports. These stocks often exhibit consistent price swings due to market trends and news cycles, make them perfect for the swing trades. So, why swing trading is ideal for retail investors like you and me? See, swing trading is perfect for those who don't want to stress on intraday trading or long wait for the long term investing. Here's why it's time friendly. You only need to analyze the market once a day. It's less emotional pressure. No panic decision caused by intraday volatility. And the balance strategy like combines elements of both trading and investing. Supposedly imagine you are holding a stock like HDFC Bank for 10 days, riding a well identified uptrend and making a 5 to 10% profit in the trade. That's swing trading, efficient, strategic and profitable. Now let's talk about the stock selection, the most important, like how can we select the stocks. Step 1, define the right criteria. Then what are the criterias? First, it's the liquidity. Like we have to select the stocks that trade with high volumes. For example, Reliance, Infosys, etc. Second step is the volatility. Like we have to focus on stocks with regular price swings so that we can enter and exit with a good volatility, which can give us a good profit. And clear trend, like either uptrend or downtrend over the first few weeks, we have to analyze. Okay, so this is the first step where we will be defining the right criteria. Step 2 for the stock selection is to use screening tools. So what are the screening tools we can use? One of the screening tool which I personally use is the TradingView. It's used for advanced charting and trend identification, and there are a lot many different aspects into this. Next is screener.in. Screener.in helps you to filter stocks based on both technical and fundamental parameters. And don't worry, whatever topics we are covering in step 1, step 2, and the other step, we will be making specific videos and comment down which particular aspect of this particular thing. Just supposedly, if you want to see a video on the screening tools, so just comment down below so that I can make a specific video on either TradingView screener or all the tools which is required for screening purposes. Okay. Third is Yahoo Finance. Basically, Yahoo Finance is nobody practically using. I personally use Screener and TradingView, but also Yahoo Finance you can use for tracking price movement and news, and also Money Control, Google. They are all there for citing you all the different trends, price movement, and news specific updates. Okay. Step 3, most important, is the analyzing charts. So this comes under the technical analysis aspect where we need to analyze any particular stocks uh, uh, charts. Okay, so let's take example of any particular stocks. For example, Tata Steel. So we have to check for a 50-day moving average for the first step. Like there are different types of moving averages as a part of technical analysis. We have to see how the 50-day moving average is working. If it's trending upward with increasing volatility or increasing volume, so it's a buy signal. But don't just get into any stock which is just giving you a 50-day average with this particular aspect. There are a lot many things which we will be talking, but this is one of the important criteria. You can also use RSI to confirm whether the stock is in an overbought sold, or in an overbought condition, or it's in an oversold condition. So RSI is another indicator which is used for this particular aspects. And most importantly, analyzing chart is all about identifying the key support and resistance area for entry and exit levels. So basically, whenever a stock has a very huge demand, the price rises. So basically, from the support it rises, and on the resistance it gets stuck because there the oversold condition comes in. So there are different aspects, and I'm sure this, if you are new to stock market and these terms are bit jargonist for you or bit difficult for you, don't worry. We'll make separate videos on specific to support, resistance, RSI, 50 moving average, and all the things which we have talked. Okay, but focus on what all things you need to learn. So we have completed step 1 to 3. That is, step 1 is what exactly is the right criteria. Then we talked about the screening tools, and thirdly we talked about analyzing charts. Fourth is about risk management. So even remember, you have the best strategies, they may fail without risk management. So here's how to do it. We have talked in our investing and mindset series. Also, you can check all the things there. But let me summarize it here. First, use stop loss. So always set a stop loss at a key support level. For example, if you bought a stock at rupees 500, you can set a stop loss at 480 depending if there is a good support area at the 480 level. Second is the positioning sizing. Like never risk more than 2% of your capital on a single trade. So balance your position based on this criteria so that you should not lose more than 2% on your trading capital. Third, risk to reward ratio. So always aim for a 2 is to 1 ratio, meaning your potential profit or reward should be twice than the potential loss. So trade accordingly, and your plan should be based on this risk to reward ratio also. Okay, so these are the four steps which are more critical. And most importantly, remember, combining swing trading with investing is one of the greatest hack which is being used by many of the retail traders who have already invested in most of the time in the stock market. I personally use this swing trading and investing hand in hand. So basically, swing trading profits can be reinvested into long term stocks like quality stocks like TCS, HDFC Bank to build a stable portfolio in a longer run. This way, you are not just trading, you are actually creating wealth. Got it? So let's recap and take the key takeaways from the learnings which we have already discussed. So, swing trading is the sweet spot between intraday trading and long term investing. Why? One, it's time efficient and less stressful. Two, we use tools like TradingView and Screener.in for stock selection. Third, manage risk with stop loss, position sizing, and a good risk to reward ratio. And we can combine swing trading with long term investing to build a consistent wealth. So, let me ask you a question. What's the one thing about swing trading you want to learn more about? So let me know in the comment section below, and I'll cover that in a detail in a future video. And if you have a specific stock in mind, drop its name and let's analyze it together and learn from that. So swing trading is not just about a strategy. Here it's about a community, and that's where the stock mantra hub comes in. Together, we can achieve the financial freedom together with trading and investing. If you found this video helpful, please like this video and comment and share with your friends. And don't forget to subscribe to this channel, and let's grow as a community. Until next time, let's trade smartly and invest wisely. Thank you and have a great day.